Today, this screencast will look at petty cash. So what exactly is petty cash? Petty cash is a fund set up for small expenses within a business that are too small and insignificant for a cheque. It is for purchases such as postage stamps, milk, and small office supplies. It is only for minor amounts of cash, and rather than the expenses debited and credited as cash, they are debited and credited as petty cash. When talking about petty cash, there are always three activities involved, regardless of whether we are talking about the small startup or the multinational firm. These are 1. Establishing the fund, 2. Making payments from the fund, and 3. Replenishing the fund. Step 1. Establishing the fund. The first step is to establish the petty cash fund. For example, to establish a $200 petty cash fund, we debit petty cash and credit cash. As the money hasn't actually gone anywhere, there is no change in assets until we replenish the fund in Step 3. Step 2. Making payments from the fund. After we've established the fund, we use the petty cash to pay for our minor expenditure, such as our postage stamps. Payments can be made in two different ways. Either we can take petty cash directly from the fund, or employees can seek reimbursement from the fund for purchases they have made. Step 3. Replenishing the fund. After we spend our petty cash, we have to replenish the fund. In order to do this, we count the remaining petty cash in the fund and we cash a cheque for the money that has been spent. This is what a possible journal entry could look like to replenish our petty cash fund. In this journal entry, the credit balance replenishes the petty cash fund to its original $200 balance. This entry has a decrease in total assets and a decrease in total equity because of the expenses. But what happens if we don't have all the receipts that we need to account for what has been spent out of the petty cash fund? This is something we refer to as cash over and short. It happens because sometimes we might lose receipts, not be given a receipt, or be given incorrect change. Cash over and short is a temporary account with either a debit or a credit balance, depending on the circumstance. If we go back to our previous example, except this time we only have $95 remaining in the fund rather than $96, then we have a cash short of $1. In this case, we debit the cash over and short account to account for the missing dollar. It doesn't matter too much if we have a cash over and short account, as we're talking about very small amounts of money, and those are the basics of petty cash.